More bad news tonight for home buyers. National Australia Bank has raised its interest rates without a cue from the Reserve. Another lender has raised mortgage interest rates. The Commonwealth Bank's variable home loan rate will go up by 0.1%.
The unscheduled 0.2% interest rate rise by the major banks smashed the festive spirit of mortgage holders. A subprime mortgage crisis in the US blamed for the interest rate slug here in Australia.
People invest in managed funds, direct shares, investment properties. They don't leave their money in banks so much anymore. So the banks have been forced to go to the wholesale markets to get their money.
And rubbing salt into customers' wounds, the decision to lift interest rates coming just weeks before an expected Federal Reserve Bank official rate rise in early February. But according to mortgage broker Peter Cooper, homeowners can ease the pain by shopping around for the best interest rate. And for those disillusioned with the big banks, there are plenty of non-bank lenders in the marketplace.
Well, you've got credit unions, you've got building societies, you have the companies such as Wizard and Rams,
as well as internet-based lenders like MyRate, which has experienced a 300% surge in inquiries since the major banks increased their interest rates.
Typically, the benefit in a MyRate home loan versus a traditional bank home loan is that the interest rate is around 1% cheaper and there's no fees on standard applications. So that's really the benefit, and that is what can deliver significant dollar savings to consumers.
Consumers like Catherine Daff, who dropped her interest rate when she dropped her major bank and its fees and charges.
Why give your money to the banks? Why not put it onto your mortgage and get it paid off, get your house paid off as quickly as you can?
I'd never go back to a bank at this stage.
Craig Cooper is another mortgage holder sitting pretty after turning to a non-bank lender, internet-based Virgin Money.
My wife said, well, why don't you give them a go? We've always gone to the banks and we've never been overly happy with them. So we gave Virgin Money a ring.
Virgin Money is 0.7% cheaper than the big banks and has no monthly fees, according to Andrew Russell.
We have a different cost structure to the big banks, but basically we're not as driven by shareholder profits. We're about providing good value.
But according to Virgin Money and MyRate, that doesn't come at the expense of flexibility. They both say they offer all the same features as the big bank loans, including fixed rate or variable loans, offset accounts, redraw facilities, and the ability to make additional repayments. So what's the downside?
Well, they don't have shop fronts, so you have to speak to a person over the phone. So that is a disadvantage for some people.
But while the lure of a lower interest rate and fees is enticing, just remember refinancing can cost money. Charges such as exit fees associated with your existing loan, legal fees, stamp duty costs and mortgage application fees should be considered.
Your own bank should be your starting point. You should offer them the opportunity to keep your business.
So why not take the time to review your mortgage and see if you can beat the latest interest rate rise?